Hey everybody, Brent Simmons here with Restoration Roofing, back with another insurance video. And I can't believe it took me this long to think about doing this video, but this is something that comes up all the time. So I shot a video a while back about RCV. What is RCV? Kind of what is ACV? And I used an example, you can go back and watch it, to show how a claim pays out over the course of the claim. So you get your, you pay your deductible, you get your ACV portion, you get your RCV portion, you get all that stuff. You can go back and watch that one. But in today's video, all I want to talk about is what a ACV only policy is and how it pays out on a claim. All right. So I've got another example up here. I did my best to try to make this as simple as possible. So let's use some easy math. Easy math makes it easy for everyone to understand. Okay. So let's say adjuster's already been out. You receive your paperwork from the insurance company or from the adjuster, and you've got a big number on there that says $12,000, and it says replacement cost value or total replacement cost or something like that. It'll have replacement somewhere in the name, okay? And let's say it's $12,000. Well, what that is the cost to replace your roof back 100% exactly how it is right now. So if it's a 3-tab shingle, it's the cost to install another 3-tab shingle, okay? If you have paper felt, they're gonna put paper felt on the estimate. Apples to apples, that's what this price should be. But technically, this is for a full roof replacement. But you don't have RCV. You don't have full roof replacement. You have what's called ACV, and that's why you're watching this video. So the way an ACV policy works is they'll take that $12,000 big number value, and what they do is they depreciate the roof. So let's say your current shingle is a 30-year architectural shingle and it's 15 years old. Or another way to put it is it's used up 50% of its life and it has 50% left. So what they're gonna do is depreciate that $12,000 number by 50% here. So if the roof, the cost to replace it is $12,000, take off half, multiply it by 0.5, and you have a $6,000 actual cash value. So actual cash value, another way to put it is the value of the current roof at its current age. So what it is, it's assuming that depreciation. It's taking off the life of the roof that's already been used. There are some policies out there that are ACV only, which means you don't get the second part of this $12,000. You don't get the full replacement value. What you're supposed to do is come up with the other money to replace the entire roof. And what I've seen is a lot of my customers don't know that they have this, or they signed up for it and it was so long ago, they forgot. So what you can always do is call up your agent or call the 1-800 number on your policy and ask them, do I have replacement cost value? Or is it an actual cash value or cash value policy only? And they should be able to give you that information fairly quickly. So just wanted to put this out there. I think a lot of people get confused about this and they expect the full cost to replace, but that's not always the case. Thank you for watching. I hope this has helped. Comment below if you'd like me to answer any other insurance questions.